If Volume 1 was about riding trends and staying patient with structure, Volume 2 is about attacking momentum with precision and speed. The 5 and 13 EMA strategy, known by many active traders as the Golden Scalp, is built for fast markets, quick reactions, and sharp entries that aim to capture explosive short-term moves. It generates faster signals, quicker pullbacks, and potentially faster profits, making it attractive to scalpers who thrive in high volatility sessions. But in trading, speed is a double-edged sword. It can mean calculated precision when executed with discipline, or rapid destruction when taken without control. The real question is whether this aggressive setup delivers consistent edge or simply multiplies noise and fakeouts. Today, we put it on trial. To set up the Golden Scalp strategy, open your chart and head to the indicators section of your trading platform. Then search for exponential moving average and add it to your chart twice so you can create the full crossover structure. Set the first EMA length to 5 and color it blue. This will be your fast momentum line, reacting almost instantly to small price movements and short bursts of volatility. The 5 EMA is designed to track immediate shifts in order flow, which is why it's ideal for scalping and lower time frames. Next, set the second EMA length to 13 and color it gold. This will serve as your short-term baseline, moving slightly slower than the 5 and helping filter out minor fluctuations while still staying sensitive to trend changes. The interaction between these two lines is what creates your signals. When the 5 accelerates above or below the 13, momentum is shifting. Once both EMAs are applied and clearly visible on your chart, you now have the complete Golden Scalp framework, a fast-reacting structure built to highlight rapid momentum shifts, clean pullbacks, and high-probability short-term trading opportunities in volatile market conditions. The Golden Scalp focuses on capturing sharp momentum bursts rather than long trend rides, so precision and timing are everything. Step 1 is the crossover. When the 5 EMA crosses above the 13 EMA, it signals that short-term bullish momentum is beginning to build as price accelerates faster than the immediate baseline. However, we do not enter blindly at the cross. Instead, we wait for confirmation. After the crossover, price must hold above both EMAs to show that buyers are maintaining control. From there, we wait for a small, controlled pullback toward the 13 EMA. The ideal setup occurs when a candle taps or approaches the 13 and shows clear rejection, then closes back above the 5 EMA. That is your structured
order filled.
Your stop loss should be placed below the most recent micro swing low formed during the pullback, protecting you if momentum fails. For take profit, target a fixed risk-reward ratio of 1:1 or 1:2. Since this is a scalping strategy designed for quick, disciplined gains rather than extended holds. The goal is not to predict massive moves, but to execute clean, controlled trades within short bursts of momentum. In a bearish setup, the process mirrors the bullish model, but in the opposite direction. When the 5 EMA crosses below the 13 EMA, it signals that short-term bearish momentum is beginning to build, with price accelerating downward faster than the immediate baseline. However, the crossover itself is only the alert, not the entry. After the cross, wait for price to remain below both EMAs to confirm that sellers are maintaining control. Then allow the market to retrace upward toward the 13 EMA in a controlled pullback. The ideal short entry form when the price approaches the 13 shows clear rejection, and a candle closes strongly back below the 5 EMA, confirming that downward momentum is resuming. Your stop loss should be placed above the most recent micro swing high formed during the pullback to protect against a failed setup. For take profit, target same as in bullish setup, focusing on quick, structured gains that align with the fast-paced nature of scalping. I backtested this strategy on the 5-minute time frame during high-volume trading sessions, focusing specifically on London and New York hours where volatility and liquidity are strongest. Following strict rules, waiting for the crossover, entering only on a confirmed pullback, placing a defined stop loss beyond the micro swing, and targeting a fixed 1 to 2 risk-reward ratio. The overall win rate came out to 68%. That means the edge is real, but only when the rules are respected. When I filter trades further by taking setups only in strong, clearly trending session conditions and completely avoiding ranging markets, the win rate improved noticeably. The biggest losses consistently came from sideways price action where EMAs tangled and produced repeated fake signals, as well as during sudden news spikes that disrupted momentum. The data makes one thing clear. This strategy rewards discipline and momentum, and punishes impatience in choppy conditions.